Good afternoon, everybody. Welcome to the Cedar-IBSI Fintech Lab Knowledge Roundtable. This month's Knowledge Roundtable is on digital lending and collections. And I'm happy to have been joined by very privileged to join by senior panelists from different parts of the world. Joining me are Armin Anklesaria from Armin heads the product and pre-sales for the lending solution. I'm also joined by Pramod Veturi, who is joining us from Malaysia. Welcome, Pramod. And Pramod is the CEO of the international business at Perfios. And we also have Vanati Mohanakrishnan, who's joining us from the UAE. And Vanati is the business head for the Middle East and the North Africa region for M2P Solutions. Welcome, co-panelists, and once again, a warm welcome to the audience. The structure is that we'll have Vanati's presentation followed by the presentation of Armin, and then we have some thoughts from Pramod. With this, I hand over the floor to Vanati. Vanati, over to you.
Thank you, Amit. Thank you for having me today here on the panel. I'll take some time to take you through M2P and what we do. We are an open API infrastructure platform. We're headquartered out of Chennai in India. We have over 20 engagements with banks and over 300 fintech partnerships. We essentially enable banks today, offer products to fintechs, and sit in between this ecosystem. We are live in over 6 markets across Middle East and Africa. I lead the Middle East and North Africa business. We believe that this space is set for some serious disruption by fintech. The last I checked, we had 250 employees across 4 locations of ours. We are backed by some leading angels and investors. We've done a couple of rounds in the recent past during the pandemic. Madhu, Muthu, and Prabhu are our founders. They've essentially had a dream of having every company become a fintech, and our platform enabling each one of them to go out there and roll out their own products to the market. In evolution terms, we started off as a payment processing platform where we would essentially go out there and issue payment products or cards. Logically, that kind of evolved into beyond payment products to a neobanking stack where we were able to enable a couple of digital banks itself in India. What that led to essentially was having multiple banks, financial institutions, merchants, and consumers on our platform. And we were actually able to harness the network effect itself into products like buy now, pay later or digital lending. And for the region of Middle East, and since India is a very big market for us, it made a lot of sense for us to also look at cross-border payments itself and how we can kind of use one of the largest sending regions and being one of the largest receiving regions, and how we can kind of use the platform effectively in that space too. We sit in between this ecosystem of banks and fintechs, co-create products with the fintechs, allow them to use the financial or regulatory infrastructure of the bank, leveraging our platform. Beyond the platform, we actually extend our expertise in payments into program management capabilities too, wherein a fintech is then just left with having to go out there and acquire, probably multiple partners or do the distribution side. And the bank has contribution in terms of the balance sheet growth itself that this brings to them. In terms of scale, in the last financial year, we processed about $5 billion through 100 million transactions. 18% of all the new credit-linked cards in India have originated on our platform. We're seeing some serious digital lending happening in India, and this space being disrupted by fintechs, largely led by fintech rather. Moving over to this region itself and how the pandemic has affected what we have seen in the region before we get into lending itself. If you look at MENA as a region, it's largely been cash dominated. When the world was talking digital, we in the region were still talking about physical to adding digital wrappers or digital as a channel only. Right? So we were still in that journey, probably moving from physical to phygital, and then eventually would have gotten to that digital phase when the pandemic actually hit us, while everything under that digital wrapper was still running conventionally. Look at e-commerce in the region. They grew exponentially. Consumers adopted both e-commerce and online payments quickly. Banks were playing catch up in that sense. As an ex-banker, maybe I can say that now that we were still laggards in that space, banks were still catching up there. fintech sort of came in quickly and stood up to the occasion. We saw digital lending or sachet loans, if I can call them, in the form of buy now pay later or purpose-based lending pick up quite swiftly. So look at a Tabby, a Spotty in UAE, Postpay, or a Tamara in Saudi, Shahri in Egypt. These fintechs kind of made waves quickly, and the way they dealt with the opportunity was actually quite overwhelming. Having said so, MENA as a region, about 45% of the region is still underbanked, right, or unbanked. And so that presents a lot of opportunity. So the opportunity is beyond lending just as buy now, pay later, or lending purely on e-commerce, which is where we've seen action so far. But then there is a lot more opportunity that the region presents. You'll also agree that for SMEs, working capital is like oxygen, right? The pandemic has had some serious adverse effects with bankers playing very, very safe, becoming completely risk averse, going to that end of the spectrum. And so the funding is being choked for some of these SMEs. They've had some adverse impact because of that. In this region, because lending was right from the way we acquired these loans, the way we disbursed the loans, did the underwriting, everything has been so conventional. At best, I think in the recent past, what we saw is some developed banks actually putting in credit engines for faster and consistent decisioning, but nothing beyond that changed in the lending space digitally, right? Bureaus are very recent. So the data quality or the offering itself is in a very developmental stage. There's no using alternate data or looking at different ways to evaluate customers itself to lend to them. While fintechs are looking at this opportunity differently. If I just look at the unbanked space, right? In the GCC alone, give or take about 40 billion USD is the kind of personal lending that's happening in the GCC. If you look at the four quadrants, the quadrant on the right, which is where the lending activity is happening, is if you are affluent and you work for the right company or a listed company, as we call it over here, there is a lot of lending activity happening. However, if you work with the listed company, yet you are in the low income spectrum, there is very little or no lending happening. If you have an income which is high, but then you work for an unknown employer, there is no lending happening. So the risk dynamics are kept so simple. And if we could actually do the risk evaluation on this matrix and actually start lending to the market, we're leaving a lot of the market untapped. Imagine if somebody starts just lending to two of these quadrants over here, which is the avoid and the tippy toes, you're probably looking at least a 10 billion or 10 million US dollar opportunity in a year, right? That's the kind of opportunity that you have in just GCC. I'm not even taking this beyond the GCC markets, right? The SME gap, of course, is huge across the world, but the MENA presents about 84% of the opportunities unaddressed. And hence, these two segments are very interesting because we're seeing a lot of fintechs showing interest in this space. Fintechs want to address this opportunity. There's another unique thing about the region, right? Islamic lending versus conventional lending. By the nature of its populace itself, the region prefers Sharia-based Islamic lending. If we look at the way a Sharia-based loan or an Islamic loan is disbursed, I think it takes about 7 to 10 days. Okay, that's the turnaround time for disbursing that loan. The way fintechs are looking at this space, how is very different. It's very interesting. Some of the POCs that we are doing with some of these fintechs, I obviously cannot share because they're still in a POC stage. But they're looking at how that demand can be addressed and how the fundamental Islamic lending can be maintained, right? Yet addressing aspects of experience, quick turnaround time, instant decisioning, purchasing that asset instantly, and how they can kind of address that need. In the UAE, for instance, roughly 40% of the banked population uses some form of Islamic product or the other. And hence how can you fit Islamic lending into the digital space and lend instantly and kind of tap these two opportunities? It's a very interesting proposition, and some of the fintechs that we are working with are doing some serious work in this space. What digital lending offers very differently, I think, over the rest is that aspect of instant decisioning. And I think bureaus all over the world will say that faster decisions are better decisions. Any application or any customer who goes through that straight through processing or straight through assessment without the decision of underwriting having to be influenced, be that through further information substantiation or through documentation or through any of those other processes, right? Or the person who's sourcing that customer itself influencing the decision. If these things don't happen, I think the decisions that go through straight through processing are far less riskier, and these tend to be safer decisions, right? And that's what digital lending addresses very nicely by saying, if you have a bad credit score, or if you don't have a credit score, there are products for all kinds. You have products for curing, you have products which address the new to credit through credit builder kind of products, and that's why digital presents a world of opportunity. I'll just take you very quickly through two very interesting use cases that we have implemented in the recent past. I'm not giving you the names of the fintechs, but one of these opportunities essentially is the early wage access, or payday loans as you call it. This is for the low income segment. Look at it as a quasi secured product, because it is essentially borrowing against the salary that you've already earned, right? It's not on future earnings, but it is on the salary that's already been earned. Thing is, this is a product for the low income segment. It's still very early since nobody lends to them. It's nascent. We'll have to see how it grows and how we can integrate them. I think the larger challenge or the bigger story will eventually evolve when you're able to integrate them into the mainstream borrowing. And that will of course come as these models and as the risk, as we're able to look at the risks, the loss cycles, and then assess how this segment can grow and how you can kind of bring them back into the mainstream borrowing. That's something that we have recently, this solution probably should go live very soon in the UAE. Another solution we have built for SMEs is the P2p lending platform that we have created, where the ecosystem essentially consists of the borrower and the lender. The lenders are looking very interestingly in this space at alternate forms of evaluating the SMEs. For instance, saying, am I able to look at you by the way you pay your bills? Do you pay them regularly on time? Probably is an indicator of the fact that you can repay. Are you able to pay salaries on time? You probably are. You already have discipline in payment. So stuff like that, right? So while it's not completely alternate data, but other forms of data also are being used to evaluate the borrowers. Of late, we are seeing that the regulators in this region are also looking at, you have regulations in P2P in UAE, you have it in Saudi, you have Oman coming up with sandbox regulations for P2P lending. So we're seeing quite a bit of activity in the P2P lending space itself for SMEs. So this is another solution we have delivered for this. For this fintech, we're actually building both the memory and the brain. By the memory, I mean the data capabilities itself, and by the brain, I refer to the strong and advanced analytical capabilities through strong machine learning kind of algorithms that we are putting in place for them. So that as the model matures, SMEs, who we believe are the backbone of pretty much every society, get access to that kind of funding, and they're able to kind of use them as working capital, and also get access further to more organized form of borrowing. Essentially, technology plays a very key role in the overall delivery itself of digital lending, not because it's called digital, but because of the way it's being rendered, the kind of decisions you want to take, the decisions of the kind of calls you want to make, the kind of ecosystem you want to kind of integrate before taking those decisions, the experience you want to offer, and the instant decisioning itself that we bring to the equation in the entire play of digital lending. I think technology is very core to the overall delivery, and the more we kind of integrate with multiple ecosystem partners, the more we're able to bring efficiency in decisioning, faster decisioning, instant decisioning, and drive costs downwards too for the customers itself to borrow. That's all I had for today. Thank you, and I'm happy to take questions if you have any.
Thank you so much, Manthi. I really enjoyed this. I really like what you just said, the oxygen for SMEs in the form of working capital finance, right? I think we all know how critical oxygen is right now, and therefore how critical the working capital finance is for the SMEs, right? So, very, very interesting, right? While we are here, Vanati, if I may have one, question around, you did mention and you did stress a little bit about on the one of the beneficiaries of digital lending, or you talked about the early pay loans or the early salary loans, right? So, and or if I may say, new to bank customers, right? That customer segment also has a bit of a challenge and risk, right? So, are there some critical success factors that one needs to keep in mind before they tap into that segment, or before they get a bit too aggressive with that segment? Or, if from your perspective, Anadi?
That's a very nice question, because when we look at a borrowing of some sort or a lending, we look at it as a lender also. The first thing you're going to think about is the risk in that space. And there is no lending borrowing without risk. So risk cannot be eliminated completely, right? So there is risk. But I think what is available today, which was not available in the past for bankers and FIs, is the quality of data. And it also depends on how you can use this data effectively at the end of the day to kind of deliver those products, right? Also, today, there are a lot of tools available to drive desired customer behavior on the repayment side. I think a lot of it comes back onto the willingness of the ecosystem itself to drive that. If you're able to drive that effective behavior, you're able to effectively use data or alternate forms of data also. And then how you make the loan itself meaningful for the customer, giving it to the customer when he requires it the most, as opposed to the conventional ways of saying, sir, do you want a loan? When I probably don't need it, right? But you keep calling me and say, sir, do you want a loan? Do you want a card? That's probably not the way the world is going to evolve now. It's largely about how do I convert it at the time when the engagement is the highest. And that's what makes the loan more meaningful today. If you're able to kind of take some of these criteria, that's what is going to drive the way digital lending will further grow or evolve.
It's fair. I think one, if I may have, now, if I may move on, Vanati, we will come back to you. I'm sure the audience will have a lot of questions. If I move on now, our next speaker is Armin. Armin comes from Ebix Lending Solutions, and over to you, Armin.
Good evening, good morning, good afternoon to everyone in different parts of the world. I'll be happy to take you through. Thanks a lot, Amit, for the introduction. Do pause me if there are any questions as we go past. But I represent EbixCash, and I'm going to speak about our lending solution and the impact of digital lending as it's happening today very, very strongly in our part of the world. Okay, so a little bit about the EbixCash lending solution. We were founded in 1990. We have about 150 installations across the globe, 40 countries. We have a predominant strong presence in banking and telecom. Our delivery centers are in Pune and Chennai, and we are a quality conscious company and have the necessary ISO certifications that are necessary. And we also store a lot of customer related data. We, in this 30 years of evolution, we did change our avatar many times over. We were first known as Indus, and I still think that brand names still stick strongly with a lot of people across the. In 1995, with GE, we started our first implementation in India. And we had GE and Intel as strategic partners, owning nearly 50% of the company then. 2002, we merged with a larger service provider company called R Systems based out of Noida. And then we moved on to doing IPO launch in 2006. We signed global contracts with the erstwhile AIG, the present Societe Generale, for our entire lending stack. We also partnered with TCS and their banks solutions. And our collections module was a de facto addendum to their offering across the globe. Then ISO certifications took place 2010, 2014, 2015. We got acquired by a US-based venture capital company called Black Dragon. And it was the same time when we realized mobility-based applications could very well complement and help our browser-based applications on the originations, repayment, loan management, and collection side. Around 2018 is when we were acquired by Ebix. And since then, we have been in the Ebix stable for the last 3-4 years. Essentially, the offering from our side is originations platform on the retail and the SME and corporate side. So we have two distinct platforms for retail lending originations as well as for corporate and SME customers. We also have a loan management system, which is the system that takes care of the life cycle of the loan once it's actually disbursed, boarded, and the entire servicing with respect to the account as well as with the customer. Finally, we have a flagship product, which is the collections module. The collections module manages every aspect of delinquency. We will look at a case study from our side on one of the largest implementations we have done. It's more like an ERP implementation on the collection side in the Middle East. Complementing each of these browser-based versions is also the fact that we have mobile apps for each of them. We also have subsets like collateral management, etc., which actually mesh very well and dovetail into our product offering. A little bit more about Ebix, our parent organization. It's a NASDAQ listed global organization. It has its footprint across 50 all the 5 continents, 50 plus offices, 7,000 employees. And essentially, the main business line of the Ebix group has been insurance premium processing. So we are there almost in every insurance exchange that is there. And we are almost processing $100 billion in insurance premiums annually. Now we move into what's bread and butter for us in Pune. This is a case study from one of the largest banks in the Middle East. It's the Emirates National Bank in Dubai. And they selected us and are using the collections platform. I wouldn't want to call it a collections platform. I would more call it a collections ERP, because we have integrated very, very significant changes in the product to actually offer far more than very traditional collection-related activities within this platform. To begin with, it's multi-entity. So actually, they have their sister companies using it. It's multilingual because it's present in multiple countries. It's multi-time zone capable, and sourcing of data into a collections module is from disparate large number of other subsystems as well within the ecosystem that they have. The first phase focus is to look at more on the retail loan side, which is the card business, the personal loans and the home loans, and the auto loan business that ENBD offers to its end customers. If we move to the gray slides, the gray blocks below, it manages the entire life cycle of collections across the entire plethora. So early warning and segmentation of customers based on segmentation and risk profiling. There are adequate collection strategies that are set up within the system, on the basis of which we do a lot of allocation to collectors who manage early collections, skip tracing, as well as legal and late collections. So the entire collection life cycle, starting with early collections, very early bucket-based collections, moving to perhaps late legal collections, intermediates like skip tracing, field collections, is all managed within this offering. But in addition to that, a lot of the other customer or the delinquent customer servicing aspect of settlements, restructuring, etc., are all inbuilt, very closely linked with the core banking system that they are using, building of proposal, paperwork, etc. All of that automation is very much a part of the collections platform that we have to offer. The key changes that we really did on this platform, this one, we moved to a customer-centric collections platform rather than an account-centric. So we holistically view a customer with the entire relationship. We have a 360-degree view of the customer for his delinquent as well as non-delinquent accounts. There is dunning using all the electronic channels that are possible. So we are more focused on SMS and emails, and these get auto-generated. Strategy Builder allows you to actually set up these calendars, send out any kind of dunning information that you want out to customers before actual people get involved in the process. So we are now having electronic push of reminders going out to customers rather than the conventional letters, etc., which was always earlier the norm. All aspects of settlement, restructuring, etc., are managed at a customer level today. So that's another big change that we looked at. We also integrated with their core banking system to mark lien on accounts, especially those where there was skip tracing or where there was delinquency. And we have a BPM tool, which actually allows you to configure different workflows now to support difficult collection processes like legal processing or repossession or restructured payment scheduling, etc., and a comprehensive audit trail of every aspect is very much retained within the system through the entire collections lifecycle that an account and a customer progresses. The other aspects on this, this is started in June 2019 as a project. It has multi-stage deliveries. The first phase go live in June 2021. The integration with the CBS platform or the core banking platform is pinnacle, and there traditionally there is a lot of data that actually would move from core banking to the collections module. But in this case, I feel there is almost a 50% or more data move back from our system into the core banking system. So all restructuring, rescheduling programs as they are, the waivers of policies, etc. Most of that is all being processed at our end, moved back into the host system. Yes, we have about close to 90 interfaces, including auto dialers. We have a framework which is the latest in terms of offering. There is online and queue-based batch processing. Complementing our browser-based application is the mobile app. The mobile app has almost most of the functionality that field collectors, repossession agents, legal collectors, etc. would actually require with respect to field-based collections. The fact is that this system does manage a large number of accounts, close to 1 million accounts. And this is a 3-country implementation with real-time automation with satellite systems. So payments, for example, today when they come in, there is a alert with mechanism within the system itself that, don't follow up on this customer, he's already paid up. We can go ahead.
Thanks.
So from my side, thank you very much. And if there are any questions at this stage, I could take them through. Sure. Or I leave it to Amit to hold master of ceremonies for the next.
Thanks, Armin. It's very, very insightful, Armin. While you were talking about some sort of a large scale implementation that took place at a pretty large bank, right? I think one thing that has been playing on my mind is, which I wanted to check with you, that with the rise of lending, or now in the form of digital lending, right, there are some potential challenges also that come its way, right? Again, one of the challenges which you are trying to overcome is through the collections implementation. So is digital lending giving rise to some challenges, and how does one address those challenges, if at all those are challenges?
Okay, so yes, challenges are there. Every business has challenges, and especially lending, as one of my co-panelists, I think Vanti said, it comes with risk. Today, I think quality of data, I think Vanti also mentioned the same thing, is something that is very, very important and needs to come in a good format for us to understand risk. Specifically moving to the collections aspect, this is where I know I may break the trend over here, but this is one aspect of the business of banking, which in my opinion and judgment will always have a blend. And it's always going to be a hybrid model. You will have a lot of digital and online help, maybe chatbots, having good customers go on board and pay by themselves or set up their own P2p schedules, etc. But in my opinion and judgment, there would be a very significant aspect of human intervention still required, especially for customers where there is no intention to pay and who have the ability to pay. That is truly one of those aspects where I would believe that collection platforms would not move to a very, very digital leaning. They would be a little bit more, centric towards having the right blend between digital as well as a human interface required.
Thanks, Armin. Very, very insightful. With that, to our third panelist, Pramod from Perfios. Over to you.
Thank you, Amit, and a very warm good afternoon, good morning to people on the other side of the world. I am on the eastern hemisphere, and the time is 6 o'clock here, so it's a good evening for folks who are logging in from this side of the world. I think I've got about 10 to 15 minutes. That's what you mentioned, Amit. So what I'll try and do is I'll break this presentation of mine into 2 sections. The first 3-4 minutes, I'll try and give a layman view of what Perfios does, because the challenge with the technology is it can get a little highbrow. And what I've tried to do today is I'll try and give a layman's view of what, or a user's view of what we do, and how we help the financial institutions digitize their lending journey. So we are essentially a Bangalore-based product technology company, and we have an AI ML-based data platform stack, and we use that to enable and digitize certain manual processes and activities that are a part of the entire lending chain, which are in some ways the last mile problems that financial institutions have. We automate those using some very nifty solutions. And one of the products that I want to showcase today is this flagship product of ours called the Insights. And I'll talk a little bit about that. But before I get into insights, let me give a parallel with our natural life that we have. So from the time we are born, right, we are endowed with this cognitive capability to actually see, identify, categorize, classify anything that we come across. From the time we are born, we have this innate human ability to do that. Now, imagine a toddler. A toddler sees if a cat or a dog, and for the first time, it actually absorbs the imagery of these animals and it tries to classify this information, categorize it somewhere in the mental model into some sort of a database to say that, okay, this is a cat, this is the kind of features it has, this is a dog, this is the kind of features that it has. And it will also look at whether it's a brown or a black or a poodle or a German Shepherd. It captures all of that somewhere in the mental frame so that the next time it is able to look at it, intuitively it is able to recognize that that's a dog and not a cat, even though both of them are four-legged creatures. So at some level, this is a natural capability, and as we grow and mature, the capability keeps evolving into a higher level where we can actually start looking at making connections, judgment, inferences, etc. That's a higher order where from the capability or intrinsic ability to categorize and classify, you get into the ability to make judgments and inferences. And how do I do that? I wanted to illustrate that with a small example. If you can just one click. Now, this is an image of obviously all of us can see this is an image of a surgeon or a doctor. But beyond what is obvious in this image, if I were to start looking at, can I derive any other intelligence out of this image? Something very interesting. I can actually look at this image and say, this could be a doctor who's about 50 years or slightly above 50 years. He's a surgeon. He's reputed. Just by the image of where he is, you can figure out that he's potentially working in a top hospital. Interestingly, the moment I think a doctor and a surgeon, I can even impute and infer that this gentleman earns $250,000. If I'm thinking UAE, certainly $250,000 of annual income and above. I look at this image, I can also say this is someone I would trust if I had a medical problem. Now, none of this information is available in this image implicitly, but the human mind is able to derive this based on past experiences and the mental box that we have. Now, in some ways, I've given this example primarily to illustrate what Perfios Insights does. In some ways, replicates this human cognitive process of being able to consume information and data that is out there around us in some structured or unstructured form. It is able to consume that for the purpose of creating inferences and insights that we are able to use for the purpose of decision making. So this is the analytical engine that I'm talking about. Next slide, please. Now, let me give an example of this. If you think about a retail lending or an SME lending journey, about which both my earlier panelists alluded to, one of the critical elements to figure out whether an individual has the relevant capacity to service a loan and whether he is a good credit risk comes from the bank statement. Now, the bank statement in a market like UAE could be 45 banks, or if you take a market like Indonesia on this side of the world, you are talking 170 banks. Now, for an individual credit analyst to try and figure out what is the information on this bank statement becomes a huge cognitive task, which is error prone. And this is where the Perfios Insights analytical engine can derive intelligence that is quite powerful. So if you think of it as if you can click further, Amit, if you can think of a bank statement can be consumed by the AI engine of Perfios, and we can figure out that it is authentic or a fraudulent document, it belongs to a retail client, has the customer demonstrated good credit behavior. We don't even need to get to the credit bureau. We can infer all of this from a bank statement. If you were to look at an SME bank statement, next, just click a couple of times. Yeah. If you were to look at an SME bank statement, you can figure out that it belongs to an SME. The engine is intelligent enough to figure out that this does not belong to a retail customer. The turnover of the company. Now, the bank statement is just a discrete set of transactions spread across 50, 100 pages, but it is able to consolidate and derive a consolidated intelligence that this SME draws a turnover of sales turnover of $1.3 million, and it's a trading company. It has 8 clients, and you might wonder how can an engine be able to derive that it has 8 clients, because it is able to parse through the counterparty payments, the trading payments from whom receipts are credit is being reflected in the bank account. It is able to dedupe those and identify those names and say. It can also indicate how many employees the entity has, because it has access to the information of how much payroll goes out. And if you kind of impute and say the average payout is 15,000, it is able to derive some level of intelligence that a credit officer or an analyst can use for the purpose of taking decisions. Now, that said, this is the tool that we talking about it. And here's where I'll possibly plug in a little bit about Perfios. We are a fintech. We are not a startup. We are about 12 years old. And we have over 400 clients spread across multiple countries. And we process today through this platform for this product called Insights, which does the specific bank statement analysis. We process 2 million loans across different banks on our platform. We are present in Asia and the Middle East and Africa. Now, I'll quickly jump to the second part of my presentation, which is a real example of what a client of ours, a bank, a big commercial bank in that region, is doing. And given that I'm actually talking of a use case, I'm trying to keep the name and everything else a little confidential here, but I will talk through, this is a real use case of a real example and how we have helped. This is an example of 2 founders who quit their cushy corporate job about 3 years back to set up a boutique restaurant in that region. And over the last 2 years, they really worked hard in terms of creating a name for the franchise, and it has done very, very well. And being ambitious youngsters, these 2 individuals wanted to expand their operation by setting up a couple of other new branches for this restaurant chain. And obviously they needed capital, and they felt that the revenue profile was such that they could repay the loan in over a 2-3 year period, and therefore rather than diluting their equity stake in the entity, they wanted to take debt. So they reached out to this bank, which happens to be a client of ours, for taking a $500,000 loan to fund their growth activity. But the problem from the bank's standpoint is that these are 2 youngsters. There is no established, either of them don't have an established track record of being entrepreneurs. They're just 2 years in the system. Being a services company, no, there's no collateral worth anything that they could attach themselves to. And a 2-year business, and that too through the process of COVID, you really don't have much to go with in terms of figuring out whether you can take credit risk on this entity or not. Now, as a part of the entire sales cycle, the application process involved these 2 individuals having to furnish 12 months of their bank statement, which they did. And in that region, there is this entire common bank statement format. So that was the format that was given. And this document happened to be about 45 pages of 12 months of data. And this is what was given to the bank. Now, I think one of the panelists earlier, maybe it was Vanati, who kind of alluded to the fact that your typical loan cycle takes anywhere between 10 to 15 days in that region. Now, why does it take 10 to 15 days? One of the big reasons is because there is a huge amount of manual activity in trying to figure out the health of an SME based on this information. This bank statement was loaded into the Perfios engine, because that's a tool that is available to the credit officer. So the information was provided by the central bank in terms of the bank information that was provided by the clients. This is loaded into the Perfios engine. And when it is loaded, it is that bank statement that you saw is extracted into something very, very powerful. So what happens is the 2-dimensional bank statement the image of which was submitted by these customers, is actually digitized with hyper accuracy, with almost 100% accuracy, into something very powerful. So if you notice the fourth column from the left, this is the typical descriptive narration of a bank statement. It's all string-based alphanumeric narration, which has no meaning. The AI engine of Perfios is able to convert that into something very powerful. The second column on the right, from the right, is the categorization. This is the core of the intelligence of the AI platform of Perfios, where a transaction narration is converted into something that underpins the entire analytical model. It is able to identify a transaction narration as a card settlement, or a counterparty payment, or a cash deposit, or a bank charge, or a check bounce. It is able to identify and categorize all the transactions, which then are consolidated into a summary report, which looks like this. So the 45 pages of bank statement in the space of 15 to 20 minutes gets converted into something like this, where we are able to generate deep insights into the specific aspects of sales behavior, the commercial behavior of the SME, and the credit behavior of the entity. The sales behavior: what is the sales turnover of this entity? What is the daily cash receipts? What is the profile of the cash revenue that you receive on a daily basis? Is it from credit card payments? Is it through cash payments? Is it through mobile wallet related payments? If we are able to generate that, we are able to generate a forecasting model based on the last 12 months behavior to say, how is this entity likely to progress going forward based on the current trend. Looking at obligations, what kind of obligations does this entity have, and how do they service their obligations? Are they disciplined in taking loan, or have they been profligate in terms of looking out for debt to fund their operating business? Through the COVID times, have they maintained a tight leash on their operating expenses, or have they been completely out of control in terms of how they're using the business? How are they managing the business? Is the business operationally profitable or not? All of that can be derived through this output. Yeah, I've spoken about it, so we can go through the rest of them. Just press through. So financial health and credit, it is able to derive all of that to a point where these two people applied for a loan of $500,000, but by giving these deep insights that were then plugged into the credit policy of the bank gave them an approval for a loan of $350,000 in 3 days flat from the time they approached the bank for a loan. And they are today now, they've gone ahead and opened one new branch. And this is just one use case. And banks that use this tool tell us, and this is bank and financial institutional information that we get as feedback: 90% improvement in the loan processing time, 60% improvement in their cost efficiency associated with processing a loan, and close to 30% of all loans, whether it's retail or SME, are straight through in terms of being where there's no human intervention, because Perfios in some ways does a very, very critical element of automating certain manual cognitive tasks of the credit officers of the bank. So in summary, last slide please. In summary, we are a data platform that complements the platform-related solutions that my other panelists spoke about. We sit somewhere inside that platform complement in a manner where we are doing the, if I can call it, the unsexy, but the most critical job of automating stuff that human beings struggle with, in a manner where we enhance convenience for the credit functional experts. We enhance convenience and experience for the customers to a point where it's a win-win-win. It's a win for Perfios because that's a business. It's a win for the bank because their internal team members are extremely happy because they have a tool that complements their capability, and the clients are very happy because the overall experience is seamless. So that's a bit about Perfios insights, and I hope everyone can appreciate the power of what we do in the region. Thank you.
Thanks, Pramod. Was very interesting. Pramod, just on the lines of SME, while I'm also having a look at the questions that we've got from our audience, we have a few minutes left, but I think one of the questions that I had, SME seems to be a big beneficiary of the digital lending solution, the digital lending right now. But SMEs, we all know, have their own challenges also, right? So are there specific things that one needs to watch out for when, lending or when digitally lending to this segment?
Certainly, I think the stats across the different parts of the world indicate that the funding gap in the SME segment is the highest across geographies. Even in an evolved market like Singapore, you have a funding gap of almost 60-70% when it comes to SMEs. And why is that? Because fundamentally, there is no standardized format of evaluating an SME from a modeling and a risk modeling standpoint. Because one, it is very easy to manufacture information and profile information pertaining to an SME. So the financial institutions have a traditional aversion because they can't depend on audited financial statements. That's not available. So if you think about a bank statement, how do you go through 100 pages of bank statement to figure out what the real underlying performance of a financial institution is? So banks traditionally did not have a relevant tool that enabled them to automate or digitize the ability to understand the cash flow performance, the real underlying cash flow performance of an SME at scale. And the Perfios tool in some ways is facilitating that. And therefore, one of the most important elements that has held back the industry is the ability to model for risk by looking at secure, information that the banks can trust. And that information, in some ways, for at least the good performing SMEs, is the bank statement. And if traditionally the UI element of how an experience of an SME onboarding a loan is getting sorted out by a lot of these platform companies. So your KYC and all of that, payment elements, etc., are all fully integrated in terms of a digital stack. But when it comes to the actual credit evaluation, that's still clunky and manual. And what Perfios is trying to do is to automate that part, which is unseen for the front-end customers, but is in some ways is the most painful, what I would call the last mile problem that banks have.
Vanati, this is for you, where we did touch upon the pandemic giving rise to digital lending, right? Or one of the drivers of digital lending could be, in addition to government and customer experience, it could also be the pandemic. So what happens once the pandemic is, almost over? So do people start to accept it as a new norm, or what happens? What happens once the pandemic is over?
I think what generally happens once the pandemic is over is something all of us would like to know. But, and we certainly hope the pandemic is getting over soon. Having said that, I think the pandemic has been a catalyst for adoption. It has certainly accelerated the pace of adoption. Having said that, the need has always existed, right? And I think going back to what Pramod just said last was the clunkiness in the whole underwriting process itself, which takes away however great your, origination experience is or the dispersal experience is. If in between the engine is not working well because you're not able to instantly decision, you're not able to effectively decision, that's a problem. And that's why digital lending or some of the tools that are available today are substituting or providing for that gap. So what essentially happens is the efficiency that you've brought in, the experience aspect that you've brought in, the transparency in the product, and that instant decisioning and making it available when you need it the most, right? That's a convenience that the whole process has brought in. The pandemic for sure will go, but the convenience that we have established through the new or the modern ways of dealing with lending are here to stay for sure, right? Once it's even for people like us, once we have experienced the digital aspect of banking without having to go to a branch, how many of us now go to a branch? Pandemic or no pandemic, we will not go to a branch. And hence I believe that once that behavior is established and the customer sees the value and the convenience, this is here to stay and it's not really pandemic dependent.
Sure, thanks. I have this question for Pramod. Pramod, I think, where you were stressing a little bit about on, the formats or the data that's being pulled out of statements. I think one of the panelists is saying for analytics and insights, what will happen if the format of the statements changes, or the format of, or the description of the statements changes, right? So what happens then to analytics and insights?
I think that's a brilliant and pertinent question. And that's the power of the new age technologies. I'm a layman, I'm not a technical specialist to talk, but I can extol the virtues of the whole era of AI and machine learning. It is completely statistical, and the ability to learn and self-learn. So what happens is we process close to 2.5 million bank statements every month. So when a new format comes, the system is through a sort of a structured learning program, the system is automatically updated and enhanced to read and recognize the new formats with no cost to the customers. So the reality is, yes, absolutely, in markets like UAE, there is a new digital bank, new bank format will come, but the system is ready. In a couple of days, it is able to recognize and train itself on the new formats, and is able to generate the kind of reports that the clients want. So it is self-propagating in that sense.
Yeah. I think I have time for one question to Armin. One of the questions, Armin, is that one of the participants is asking, will we see countries in Middle East, North Africa and APAC regions adapt to the new age digital lending laws and regulations?
Yes, they have to. I think Vanati said it very correctly. The days of brick and mortar branch are over. Okay. The day when a customer wants to see all his options, not come under sales pressure, look at everything that's available to him, is going to be the future. The fact that today, I think one very important point in all this entire digital processing is, obviously it has to be regulated and it has to be getting the support of the regulatory authorities. But one of the biggest benefits of all of this is also to the bank itself, because not only are you streaming down and bringing down turnaround time, but you're also decreasing your costs. Both the panelists speak about the fact that there is a lot of digital augmentation that can be done to approve and underwrite and understand risk. But the fact that a lot of traditional things like doing, verifications, field investigations, etc., is now passé, brings more that, these costs associated with human intervention to run through large amount of data that was required to actually approve the loan is now going away. So governments, banks, any part of the world will move towards this. This is the future. There is no way of getting out of it.
Thank you so much, Armin. I think we are almost at the hour where we need to wrap. So thank you so much, Pramod, Vanati, and Armin. Really appreciate you taking time and speaking to our audience, and I'm sure they've benefited significantly. There are a few questions which I will then circulate internally and have them answered by the panelists.
Yes.
Thank you so much, everyone, for taking time. We did have a good audience today, and I really appreciate each one of them taking time. The recording of this session also will be available soon. So thank you so much every day, and have a great evening and have a great day ahead. Thank you.